Welcome back to Rockstock Channel. It is Friday, May 31st, and we have today, for the first time, Andrea Hodder of Fastmarkets. I don't know, maybe you're the third or fourth different person from Fastmarkets that we've had over the years on the podcast, but this is ahead of Fastmarkets' flagship lithium and battery materials conference at the end of June, 23rd to the 26th. Rodney and I are going to be moderating and participating in a couple of panels there in Las Vegas, as is Andrea, who is based in New York. I think your Twitter says you're, a British gal in New York or something like that. But you are an editor, a writer. You're not a price reporter, but you cover a lot more than just lithium. So this discussion is going to be much broader than just lithium. But at the conference, you will be moderating panel as well, I think, with Patrick Horvath of Exxon, and they've made a bit of a push into DLE in Arkansas. But so we're going to talk broadly about your beat, and your beat is very significantly focused on traditional mining. And there's been a lot of M&A talk, but not a lot of M&A action, as BHP and Anglo deal has not happened. And this follows like Glencore Tech last year not happening. So why is there suddenly all of this activity and interest to merge among the big boys, and why is it not happening?
I think we've got to this stage now where companies are looking for growth, and they are realizing that it's very, very hard. It takes billions and it takes years, decades to actually grow units of supply. So they are looking for growth in a different way, which is by buying other companies. And we've seen some small acquisitions. BHP bought Oz Minerals. We've seen some little bits and pieces along the way, but we've not seen any kind of mega mining like we did probably 10, 15 years ago for quite some time. And, the copper story is obviously at the heart of the Anglo BHP saga. It was also at the heart of the Glencore Tech saga. So I think that that's a very common thread running between the two. But, BHP has at the moment had to put up or shut up. It shut up. Effectively, it had to walk away by a certain time under UK takeover law. It was interesting to me that deal they knew that they'd have to come up on price. And I think that you could see by the end that they'd come up about $10 billion, and that you could tell Anglo was a little bit more comfortable with that. But the structure, they just really dug their feet in. That's the interesting part. BHP wanted to totally break the company up and cherry pick the parts it wanted. And the big sticking point was that it wanted Anglo to go and do the dirty work of demerging its South African platinum with metals and iron ore businesses, which didn't go down very well in South Africa, especially because BHP's got a pretty difficult relationship with the country, because after it bought Billiton, the flagship, it pretty much left the country. But also because the demergers would probably have taken a couple of years and shareholders would have been locked out. The thing that was really fascinating to me was that if breaking the company up seemed to be completely against the grain for Anglo, what I found out very interesting was that they decided to speed up an internal review that they were already doing. And they announced that they plan to break up the company and focus on copper, crop nutrients, and iron ore. And that to me is interesting, again, because it's that whole focus, get rid of the little bits we don't want and then see. So it seems even more radical than the proposal by BHP. So now BHP has to take a step back for 6 months unless another company comes in to bid for Anglo. So it might not be over. It could wait and see where we are in 6 months, a year, when Anglo has actually done this work, and then be a much more attractive, streamlined company. So in a way, it could be just dressing itself up for a better marriage down the line.
I think you touched on something really important there, Andrea, and that is the reality of what it takes to build a mine, and the cost and the length. And what you're clearly seeing from companies now is, having done the economics, they figure it's a better bet to pay a premium given where prices are relative to spot prices of commodities, and do those deals. Based on the BHP bid for Anglos and some of the other talk we're hearing and almost every report I read, would you say it's a fair comment that the majors all assume that copper is a slam dunk as an investment for the next 15, 20 years?
I think so, yes, and I spend a lot of time in the copper industry really with the companies there. I go to a lot of the events and the conferences, and the miners have been obviously bullish for a very long time, but I feel like the story has just gotten out there again. Maybe BHP helped a little bit, but investors are really waking up to the fact that in the long term, there is a very good fundamental story for copper, and it takes so long. Because it takes so long to build a mine, decades, really, it's absolutely crazy considering. So these big deposits are also in really quite risky, often areas. All the easy copper is being mined already. So you're going to have to convince your shareholders. You need to go into the DRC. You need to be in Pakistan. You might have to go into Afghanistan. You've got to go into countries where shareholders previously may have been a little bit reluctant and didn't want to take on that risk geopolitically, security-wise in some instances as well. And the only way to add units, therefore, if they're not going to go in those jurisdictions, is to buy a company. The thing that was weird for me, again, with this Anglo BHP deal, is there are much easier ways to get into copper if that's what you're looking to do. There are other copper targets out there. First Quantum, Tech's base metals business, which is obviously in play. Ivanhoe Mines, London Group, they have a whole host of units. Antofagasta, Freeport, there are tie-ups that you could do in some shape or form, joint ventures, whether it's a joint venture or an acquisition. So I think it was almost a kind of a strange way to go about getting copper if that's what they really, really wanted. And maybe the way that it's going to have to be now is let them streamline it and see. But you noted their traditional miners. I think we're all laser focused on those traditional miners, but you've got to remember Saudi Arabia's public investment fund has been very active. They want to make mining one of the third pillars of the country's national economy. They're diversifying very quickly, and they've got big money to throw around. There are other sovereign wealth funds. So I think that we are watching these traditional miners, but we've got to look at, these kind of curveballs that can come in and some out of nowhere sometimes, seemingly, but actually they are there. They have been investing for many years. They do it across the board in the base metals, across the board in, other markets. And now they're if they decide to turn their attention to copper, game over on the valuation side. They've got the money.
Andrea, I forgot to properly introduce you, other than the fact that you're in New York, and you did just start a podcast called Fast Forward. I think you interviewed one person so far from the U.S. State Department. We will talk a little bit about U.S. policy, but I also forgot to just introduce again to everybody watching here. Nothing you're going to hear is financial advice, but if you like this video, please like and subscribe to Rockstock channel and click the notification bell so you get all of our videos going forward, and leave a comment. And if you haven't already done so, please register your email at rkequity.com so you can get our Lithium Ion Bull newsletter. And if you have any questions you don't want to put in the comment, but you want to ask Rodney and me directly, do so at rockstockchannel@rkequity.com. Andrea, you've been covering commodities for how long? And has it always been for Fastmarkets, or were you a journalist somewhere?
Yeah, I was at Dow Jones and the Wall Street Journal for a period of time. I ran commodities and energy there, so I had a kind of a overview of the world a little bit more broadly across commodities. So that was very interesting. I actually started my career at Metal Bulletin way back when, before it became Fastmarkets. Yeah, I have always been a journalist though. So it's definitely, That's a lie. I did take a year, and I worked for a year on a trading desk for Mitsui, and went to the dark side just to see what it was like. But I realized in my heart I'm definitely a journalist, so it was an interesting experience, but not for life.
Yeah, working for a Japanese company also must be an experience as well.
They were great, actually, but it was definitely I was watching the news go by and thinking, why am I not writing that story? So it taught me a lot about myself, I think, as well.
I watched Robert Friedland, who is a client for a long time, and actually before he was a client, I used to sell South African equities at a French bank, and I was there when BHP had merged with Billiton, and there was like, and Anglo was unbundling De Beers and other things. So that was like a long time ago. But I also experienced while at RK Equity all of the the boom and M&A, and Rio Alcan and some of the fiascos. And I was at the LME week, I guess, in 2019 when the old Rio boss JS, but he was making a comment then that he showed, all this M&A that they did, and then he juxtaposed that with all of the write-offs that they did. And in 2019, the BlackRocks, the AV Hambros of the world were still arguing, just give back, money to shareholders, capital discipline, don't invest in growth. And now AV Hambro is not saying that. He's saying invest in growth. And then I saw Lee Gehring and Andy Rosenzweig gave a podcast recently that mining equities have never been cheaper, relative to where the prices have been. So it's been a hated sector for a very long period of time. Had a bad reputation, et cetera. But valuation, like to Rodney's point, Anglo sees buy cheaper than build. But if you listen to Robert Friedland and AI and the electrification of the world, more copper needs to be found and produced, in the next, I don't know, by 2050, compared to like the last, 700 years. So I guess, what are you, what are your thoughts on copper? What are your thoughts on nickel? Because nickel prices, there's a whole story, on China, but now New Caledonia. Let's talk about those and
Sure.
a few more.
Sure. We were just saying that, copper's been incredibly interesting recently because I think there was already a momentum kind of building a more bullish case for copper that was building. But I think that was definitely the medium to long-term view. I think where things were suddenly blown out of the water was in the short term. Copper soared in the last couple of weeks to a record all-time highs above 11,000. And then it suddenly came off very, very quickly. And I think you need to watch for bubbles in the commodity market. I am a firm believer in the long-term bullish trends around many of these markets, but I do believe that the weight of money is carrying some commodities into way overdone territory. And if you look at the basic supply-demand fundamentals at the moment, the data isn't matching the price action. The latest, and I know this is small in the overall scheme of a 25 million ton market. The International Copper Study Group thinks the market was in a surplus. When you adjust it for changes in Chinese bonded stocks, I think they said it was around 335,000 tons in the first quarter. Okay, not great, huge surplus, but it's not a deficit. And it comes at a time when you've got these high prices. Chinese consumers are starting to slow down purchasing because prices have heated too much. And then when you start to hear things about like that, you've got to worry about substitution. I am very curious as to whether some of the more bullish sentiment has happened because investors are a little bit confused between the refined market and the treatment and refining charges that's Starga as well, which is a big shortage of mine supply, but not on the smelting side. I'm wondering if they're panicking that they can't get hold of concentrates, which is not the case, and that's why they're buying futures. I don't know. I'm not suggesting that all investors don't understand what they're doing, but it does seem that there are, a word I've heard quite regularly recently is tourists tourists in the market who are just coming in because it's a herd mentality. And I think that's where you see these big price swings, and that doesn't help your equity investor say, I'm confident that this market is something I want to get involved in, this company. If the share prices, if the price of the underlying market is so volatile, then how comfortable am I investing in there? And I think that can be sometimes a deterrent. We just had this huge short squeeze on Comex that because the price went so high so quickly, a lot of people were caught out. So I think great to have the speculative and macro funds come in, because when they get excited about copper, it creates more depth to the market. It's wonderful, to have more people and more seasoned players in the market. But I do think there are a lot of what I just call tourists who come in and out, obviously not all, but some. And that hasn't helped. And it really does make it very difficult, I think, potentially to an investor to sit there and say, I'm comfortable with this. That's just one thing.
Andrea, I've always seen with copper in my past life, there was a decent forward futures curve. So you could go out almost as much as 5 years. Are we seeing backwardation? So it's just frothy on the front end, or what is the shape of that curve, and does it offer an opportunity for producers to hedge forward and lock in and spend on exploration?
Yeah, producers don't like to hedge. It's quite funny. They really don't. When the price is high like this, I think a lot of them are quite proud of not being hedged and that's the same across all markets, isn't it? So I don't think the curve is against them, but I do think that unfortunately we're in a situation, well, not unfortunately, but we are in a situation where there's more focus, I think, from a producer perspective on what do we do with the equity that we've been building through the up cycle. That a lot of them have had some real. They're doing incredibly well on the mining side. Smelters, not so much. They're losing a lot of money because of the treatment and refining charges, which are in negative territory. But you start to see, I think, majors are going to have to. We're not seeing situations where there are a huge number of private equity seems to have taken a little bit of a step back. And I'm trying to understand where that comes from. You guys may be seeing something different, but they obviously, specialist mining private equity can be very attractive alternative for juniors, but you're not seeing too much of that. And again, this comes down to where are all the copper projects? There aren't that plethora of them like there are in lithium, for example. There are many, many juniors in lithium, right? But you don't see the same number in copper. You don't really see the same number in nickel either. And I think that's why there is this interest in this sector right now.
We're connected to a couple of lithium development companies. Until recently, lithium, for a very small amount of exploration drilling, you could define a very large deposit, and the market rewarded you. So for market cap for $1 of spend, it was very attractive. And then we represent a company in nickel, Talon Metals, which they're drilling. The market doesn't reward it, at all.
Yeah.
And copper is similar. So that could be part of it. Copper is also, I've been listening to Robert Friedland telling me you're going to need to see use a telescope to see the copper price. He's been saying that for 10 years, right? And Alliance Bernstein and Paul Gate and other people, I remember reading research that we'd have $10,000 copper, 10 years ago, right? So there's been a lot of false starts there. Now you're finally saying, okay, we're at a record high, but that's on a nominal basis. Inflation's increased a lot. We're not anywhere near an all-time high on a real basis,
right?
For copper. But that said, there has been a dearth of exploration dollars spent, and it does take, a lot of time.
Andrea, you mentioned, replacement, and that's what we've seen in lithium. When we hit $80 a kilo, suddenly sodium ion popped up everywhere, and we're now seeing some capacity, and now that is possibly under threat given the size of form factor cells and ESS and so on. But sodium ion, an industry has now been born. What are the real relevant and realistic replacement alternatives for copper?
Aluminium is the alternative there. I think, and it's significantly cheaper, obviously. The aluminium price is around $2,700. Copper's over 10,000. It does not have exactly the same properties, but we did see in previous cycles when copper has soared higher, when it was over 8,000 and aluminium was several thousand lower, similar kind of proportion, that there was substitution, and that substitution becomes permanent, right? It doesn't just happen for a little while. It does become permanent, and those are tons that are lost from the market. So there is that concern that you get to a point where fabricators decide, and a lot of these fabricators are in China, and they have great technology in China. We know that from lithium markets and other markets. So I think we have to definitely make sure, that in any industry that there's an awareness that high prices can sometimes have unintended consequences, and those consequences often are, if they're not happening to other markets as well, there's consequences of substitution.
But those are very specific applications. This isn't a nickel pig iron moment. This is a...
Right. Exactly. That would be for like your wiring or something like that. But, sodium ion batteries as well, I think that's going to take a little bit of time to gain market share. Its characteristics are similar to LFP. With the downtrend in lithium prices, there's not such a valid business case there, right? Based on the cost advantages in EVs, probably similar in energy storage systems. So I know our analysts are forecasting it's only going to be about 4% of the market by 2034. So, there are obviously nuances between the different markets, but then you're not going to see a wholesale substitution away from copper because of high prices. That's just not going to happen. But I think your point about why can't we attract interest for Talon? Why can't we attract interest for some of these small copper companies is absolutely right. Maybe there is that issue of, I don't know when this project is going to be up and running. I don't know how long it's going to take for the permitting to go through. That's a huge headache.
The issue with copper, it seems more like than with lithium, because with lithium, we're seeing discoveries where the grades are similar to existing mines. Copper, you're seeing leaner and leaner grades in certain jurisdictions. So the question then is, how much dirt do you need to move? How much of a footprint do you need in order to produce? And that, I'm sure, is raising some permitting questions.
Yeah. And I think also the other thing is a lot of the permitting that they're trying to do now, this is the other side of it, is I think there's going to have to be a level of education, because everybody thinks about mining and they think terrible, dirty, horrible business that's no good for the environment, and we definitely don't want it in our backyard. But we understand we need it, but we just don't want it in our backyard. And a lot of these projects are in their backyard. They are in Canada. They are in Arizona. They are in different places across the states. And that's where there is opposition. Somebody was telling me that it can take, 5 or 6 years to get the permits for a recycling plant. Recycling, it's just quite incredible. So there are instances of this, 10, 12 years, same as lithium, but copper's really had problems with it. So if we're going to meet energy transition targets, we need to get a bit of a move on.
And just in terms of, like all good things, there's either replacement, and the other is, of course, to create and improve the copper intensity for applications. How is that technology? How much money is being invested into trying to lower copper intensity?
I'm not sure. I don't hear much about that, to be honest with you. You really don't hear about people trying to. I'm sure they are, but that's probably a little bit too far of a step away from anything I know about. But I definitely would imagine that at the moment it seems to be that there's more of a reliance on, we hear these numbers, we need X amount more escondido mines in the next however many years and stuff, but they don't exist. So how on earth is the world going to get there? So you're right, technology will have to eventually make a difference. I just don't know how it's doing that at the moment. And I don't know if anyone is trying to look at that.
Well, you've touched on recycling, and that is always an avenue at the right price.
Yeah.
Recycling's got to be viable, so I'm sure that's an avenue.
Yeah, definitely. It is. And I think, you are seeing more and more secondary and recycling plants in the US. So that's definitely, and around the world. So you're seeing big smelting companies move in that direction. You're seeing a lot of private equity starts. That's where they seem to be putting some money, actually. So I do think that is there. It is coming, but it's part of the answer. It's not going to be the solution because it can't be.
Andrea, a lot of the story behind copper is computing power and electricity for AI. Is that applicable as well to lithium, nickel? I was just thinking, like, shouldn't that generate more demand for energy storage solutions?
Yeah, nobody has really talked about any other market with AI other than copper. So I certainly don't hear people talking about it. In theory, though, yes, it should. It should be applicable to all batteries for energy storage solutions. So it's interesting that we aren't hearing that. And maybe it's just, a few years ago, it was copper and EVs and infrastructure charging, right? But then I think they realized that wasn't necessarily there yet. So AI seems to be the next thing everybody is talking about. I'm not saying it's not going to be the big thing. And I think if you're talking about it now, it means, you get the story, you understand it. But how much it actually accounts for the market, I don't know. Will it eventually? Yes. Will it therefore have implications for other metals too? Absolutely. Yeah. No, I agree. I think it will.
The upcoming, we've been talking a lot about, Elon Musk is having his robo-taxi unveil day, which is August 8th. And 4 years ago, he had his battery day, which was like a month or two before the election. And this is going to be a couple of months before the election. But so to the extent, Tesla was meant to be a battery company 4 years ago. Now he's saying it's a bet on autonomy. Both. He also said he's going to introduce some lower priced cars or talk more detail about those cars. So we'll see about that. But I think, if AI is the next theme, it does make sense for energy storage.
Yeah.
Could we talk a little bit about nickel? Because nickel had a disaster of, 2 years or so,
Yeah.
as China and Tangshan and Indonesia, and so what's happened there, what's happening in New Caledonia that has resulted in this, rise in the nickel price. But also, if we could tie this into, U.S. policy,
Yeah.
because is it okay? Like there's some thought out there that China, not only wants to have cheap nickel for itself, but they also want to control the nickel price, right? They have geopolitical leverage, from that. So I don't know what your thoughts are, but if you can help us.
Yeah. The biggest thing that's been happening very recently is New Caledonia, which is a French territory in the Southwest Pacific, and it's got some of the world's largest nickel reserves, but it's been a real problem area for years. High fuel and coal and freight costs, and ongoing political tensions there. They basically created a really difficult environment for international miners, and there are international miners there. That's been the situation for a long time, but what's happened lately is that some proposed changes to electoral laws were basically opposed by the indigenous population of New Caledonia, and the situation deteriorated to the point of riots. And the islands were put under a state of emergency for a couple of weeks. That state of emergency has been lifted, but it just highlights the tensions that were there. And before all of this happened, it already was pretty bad for the miners there. You have Glencore had a smelter there called Koniambo, which it put on care and maintenance in February, so that wasn't operating anyway. You had 5, I think it is, mines and a smelter operated by Eramet under SLN, Société La Nickel, and a consortium running the Goro mine and processing plant, which is under Crony Resources New Caledonia. Trafigura's got a 19% stake in that consortium, and Elon Musk you mentioned him earlier. He already signed a deal backing the supply of nickel from Goro for its batteries for EV. Prony and SLN were already operating at reduced capacity. They got some emergency funding in February and March, respectively. And then they ended up with a situation where Prony stopped operating because of the riots. SLN was basically the mining operations stopped. So all of these things basically were just the icing on the cake for these operations. They're all high cost. Prices were low at a certain point, and the situation had been really, really exacerbated. And okay, prices are slightly better now because the supply concerns have helped inject some upside momentum. But this is a story we're seeing across the globe. We've seen it in Australia with high energy and labor costs. There's a long list of operations there, including BHP's Nickel West, which was put on care and maintenance. And you've got the operations of First Quantum have been suspended. You've got Panoramic, Cosmos, a whole list of them. And yet, the nickel market's still in a surplus. Now, I know our analysts say it's a small surplus, it's 14,000 tonnes, but it's down from a surplus of around 243,000 tonnes, which a figure they've trimmed a couple of times, but it's in a surplus because of Indonesia, and you mentioned that earlier. Production there just exploded. It banned nickel exports in 2020 as part of an effort to draw investment onshore and to add value to industrial chains. And I think the International Study Group just put out some data that said that it accounted for 63% of world mine production in the first quarter. So the plan worked. They added the value and they added the investment to their industrial chain. So the important thing, and this is going to your point on US regulation, is the bulk of those projects have a Chinese and an Indonesian shareholding base, and it's usually Indonesian in the mining phase, and the Chinese have come along in the smelting and refining phase. There are Western companies active there as well, but most of the projects in the country have more than 25% Chinese ownership. That matters, to go to your point, or how that matters for the foreign entity of concern definition for the purposes of the Inflation Reduction Act. Any company that is owned by, I think it's owned by, controlled by, or subject to the jurisdiction or direction of a government of a covered nation, and that includes China. It's China, Russia, North Korea, and Iran. They are not eligible for tax credits under the IRA if they have an ownership of more than 25%. So all of these companies that have more than 25% ownership aren't eligible for IRA tax credit. So they are already at a kind of a disadvantage to a certain extent in terms of accessing that money, and add to the fact that Indonesia doesn't have, it's trying to get, but still doesn't have a free trade agreement with the US. As you know, EV tax credits require batteries to be built with at least 40% of the minerals coming from the US or a company that it has a free trade agreement with, and that percentage is going up annually. So yes, there'll be some clever restructurings of equity stakes to take that ownership lower, but it doesn't end this reliance on Indonesia. And I think that's very, very interesting for the market. So the Talon Metals of the world, they're a very smart team. At some point, people are going to realize that they do need that nickel and they do need those projects to work. But you've got so many difficulties across the globe with the other operations. I don't think that's really, the awareness of that has really kicked in, and what it means and how all of these pieces connect when it comes to batteries. Because I would like to know how many car companies or battery manufacturers are still buying nickel from Indonesia and don't really realize it. This is going to be a big question, and this is where the tracking and tracing is going to come into the equation, but it doesn't exist well enough at the moment for people to really know.
They gave graphite like a reprieve of 2 years because the traceability, they said, was too complicated, but I don't know how they go about traceability, but nickel seems pretty complicated.
Yeah. Exactly. And the other thing with nickel as well, how many companies are sure that the battery they purchase doesn't contain Russian metal, which could be sanctioned as a direct import in their country, but has gone into a battery somewhere else in the world and made its way to their car, so there's a lot of interesting kind of things that are going on that people probably aren't aware that they may or may not be allowed to do those. And like you say, the tracking and tracing side, it really needs to work before any of these rules, regulations, and so on are actually being applied properly.
Yeah. I think fundamentally it's all very hard. And, the politics may change of this, but you say, okay, you can't buy from these countries, but then where can you buy? Because they're shutting down in the other countries. And so if they're shutting down the high cost, then you're saying, okay, you have to buy the higher cost. Then if I'm buying the higher cost, then the EVs are not affordable. And then, we can't make money from the EVs. So
Right.
it very complicated. Companies like Talon, I mean, that will be a low cost mine. That's a high grade mine. The question there is really just getting the permitting approvals and,
Yeah.
but other ones that are shutting down, like you mentioned in Australia or elsewhere, don't seem to be getting support from, so I don't know. I don't know a way around it. The Chinese have applied technology, and they've made it work. It's old technology, whatever this HPAL. They said it couldn't work, and now it's working. But it
Yeah.
does have very significant environmental considerations and
Yeah.
implications, which to the extent how important is sustainability versus cost, right? Everyone was talking about ESG a few years ago, but we can't make affordable cars, so it a lot wrapped up in that. But fundamentally, this New Caledonia coming offline, commodity equities follow commodity prices. So companies like Talon and other, a few years ago, Elon was saying mine more nickel, and a year after that, he was saying lithium has software margins, right? So now lithium, nickel, graphite prices are all very low. Supply is keeping up, and
Yeah.
so what and Indonesia is the cause for the nickel price falling, and
Right.
will this new, I don't know, do you see any sustainability in the price rise for nickel?
Again, as we were just saying, I think that given the backdrop of where you're going to get your nickel from, if you start to really apply the rules to the letter of the law, then the price is probably going to have to go up, right? We hear a lot about this price bifurcation. Some countries buy from here, some companies can't buy from here. Maybe we do see more of that. I think the supply chain. So I think thinking around battery chemistry is going to potentially have to shift if projects are just going to disappear or close or reduce capacity in nickel. Maybe that's a benefit for lithium, so unless we saw what happened when battery companies decided we're not going to use, or OEMs decided we don't want cobalt in our batteries, or we want less cobalt in our batteries, they engineered it out. Do we get to a stage where we start to see nickel being replaced? In many instances.
The growth of LFP is
Right.
partly the reason for that.
Yep.
Let's just switch to lithium and the upcoming conference. Last year, I remember you interviewed all the majors, Albemarle and Livent or whatever, Arcadium and Ganfeng. And I know the CEO Raju is going to be moderating, that panel. But
Yes.
And you're interviewing Patrick Horvath of Exxon. So, but Albemarle, Arcadium. What do you think are the hot topics? When you're out at the conference, what are you thinking that people should be focused on and we'll be talking about from the broad lithium companies, and then we'll talk about Exxon.
Yeah, I'd actually really love to know what the OEMs are telling them about the ESG stuff we just discussed and whether it's actually translating into action, because we hear so much about sustainability, but does it really matter to their customers, or are they more focused on securing the materials at any cost? And if it does matter, are they paying these green premiums we hear about? Does this magical green premium, this price bifurcation exist? And how much leverage has changed for the mining companies to secure those green premiums as prices have fallen and supplies have stayed relatively ample? I think that would be very interesting to hear their views on that. I don't know if you've got thoughts on that.
Well, my thoughts on that come actually from our interview with Paul Graves. I think he has like 5 major auto OEMs who now understand that they need to put in floor pricing that's high enough to justify them continuing investing. Those floor prices over reasonable periods of time are at premiums, at times to where the spot price is. So he wouldn't call it a green premium because he's not really selling into a spot market, especially hydroxide it is the focus. But there is just a general understanding that they need to work as partners, and sometimes but the green premium has the corollary in that they're getting a discount when the price goes super high because there are ceilings. So that's, but I don't, he's not of the view that there's going to be like a persistent, premium, like there'll be North America, like natural gas has, different prices in different markets, and that's not green related. It's just like logistics related.
Right.
But, if OEMs want to develop ex-China supply chains, localized supply chains, they have to put in some floors to guarantee a minimum rate of return. And that's, I'm sure, what GM has done with Lithium Americas and Thacker Pass, right? There's a floor price that the Department of Energy, before they're going to lend them the money, said, okay, Thacker Pass, you're saying you're going to produce at 7,000, 8,000, 9,000, whatever it is, we need to be paid back our loan. GM, you've got to pay a minimum of, I don't know, $14,000, $15,000 a ton, for a period of time. So I'm absolutely certain there's a long-term floor in that is probably at a premium to where the average price of lithium was over the last kind of 5 or 6 years. But it's very difficult to say. You don't know if it's a premium because who knows? There's not like a long forward curve,
Right.
in lithium like there is in copper. Okay. So besides green premiums, other topics you think are hot?
Yeah, look, the price action and where they see things, obviously, I don't know if they'll be able to talk about that, but that would be interesting, whether they see these kind of big swings in prices becoming less volatile as we go along. I think they probably do, or hope so anyway, what they're doing with their projects as a result. And obviously that's important for all of those companies. I am really interested in the oil and gas majors. I know we may have slight differences of opinion on this. I'd love to hear what you think, but I personally think that they seem to be, yes, they're putting a lot of time and attention into how they can become big in lithium. They understand the technology, ticks all the boxes as a diversifier. They've got the deep pockets to withstand the cycles. They've got the relationships with the major car makers. They know how to develop the automotive technology. So they've got a customer base ready-made for lithium production. I'm watching them to see what they will do eventually, because I think they could be more important than we necessarily know. And they may not be going massively into it right now, but I think they're finding their feet and working out the world and the industry before they decide, who do we buy?
Okay, so you're interviewing Patrick Horvath. Exxon is a major, so I think they're one of the top sponsors of this conference. So it's in line with Exxon spending money on lithium. They've been very vocal on their website, and doing podcasts. And so they're a cynic, watching Exxon over time that would say there's all sorts of projects that they promoted and then killed, or and they do things, for PR reasons. So like to make, and also some of the statements that they've made about production expectations, if that was like put out by a junior miner, the regulators would, slap them for that disclosure. I'm curious, you're going to interview, him. Obviously they have the balance sheet. Yes, Arkansas and DLE, they announced, there's when they put out this press release, they'd never seen this before. They said, like, we're drilling our first lithium well. Right? It's very much oil and gas language.
Yeah.
So I hear you. Yeah, they have auto industry, but fuel goes into the cars. Are the oil companies big suppliers to the automotive supply chain, in the way that it's one thing for like Sibanye-Stillwater says we're supplying platinum, we know how the auto industry thinks, right? Or steel companies know how the auto industry thinks. Did the oil industry really know in that way from a supply perspective? So when they make that argument, we're connected to the auto companies.
Mm-hmm.
That also sounded a little bit weird to me. Like, fueling the car is not the same as supplying the raw materials to the car.
No, it isn't. And I think that's why they're not coming in and being too arrogant about it yet, in the respect of, we're coming in, we're going to put an offer on the table to buy a major lithium producer, and boom, here we go. I think they are trying to sound out the industry, work out if it is a viable industry for them to invest in. Maybe the question is, what is the trade-off if they start to supply the auto industry? They can do both. They can supply them the oil, and they can supply them the lithium for their electric vehicles. But do they want to? And I think we're not that far down there into the situation yet, but who knows? They might venture down the supply chain and surprise us all. It could be a game changer if they actually do, but I'm not saying they will. But I am really curious to watch that, because I think that's going to be a very interesting development. If they go into this big time, that's game changer. Kind of it.
It could look. They have the money and they have the low cost of capital. So the prospect of DLE, in oil field brines, we represented E3 for a period of time, and it's like, once they prove it, with 120,000 ton, then you build another, you build another.
Right.
But no one's yet proved it, right? And it's so it's something to watch. It's a risk to conventional ways of doing things.
Yeah.
But in my mind, I'm watching Exxon. They merged. I forget who they merged with. The Pioneer, I think. $50 billion, $60 billion merger. Albemarle sitting there at a 15 billion market cap, and they have a catalyst business, which is not just a lithium business. So like if they were really serious, there was a time when the multiple of the oil companies were very low and the lithium companies were very high, and you could argue it wasn't accretive. But that's not the case anymore, because Albemarle's valuation has fallen to an oil company or a mining industry multiple. So,
right.
And so to me, if they're really serious, a $15 billion check or 20 Albemarle, and if they wanted to sell the bromine business, whatever, like that, then I believe they're serious.
Yeah, no, exactly. And I totally agree with you. I totally agree. That's why let's see where this goes. You're right. We might be sitting there.
This is R&D,
right?
/ PR in my judgment. We won't know, but I'm just wondering if in a few years, Exxon saying, we tried, it didn't work, right? And then a whole host of other DLE players, suffer because everyone says, oh, Exxon tried, it didn't work. And, it was a cynical ploy all along, from Exxon. Anyway, I'm not saying that's going to happen. Just, I know people who worked at Exxon, who have observed Exxon and other, oil companies. And this has been what they've said, that this is an MO of Exxon.
Yeah. Yep. Watch this space, eh?
Okay. Is there anything else, Rodney, that you want to ask Andrea?
No, this is great. Obviously, we'll see you at the conference.
Yeah. Look forward to it. Yeah, not long to go, just a few weeks. I think it's the 24th to the 27th in Vegas again. So
I don't see your name down on the running club, though.
Really? I don't know what that oversight would be. I must be doing the yoga class instead.
I might see you there, Andrea. I didn't realize that they had. Yeah.
Yeah,
Yeah.
yeah.
Okay. I'll sign up for that. Okay.
Perfect. Thank you for having me. It's been great. Great to chat with you guys.
Pleasure, Andrea.